Well, hello everyone. Tyler Ford here, Tucson, Arizona, eXp Realty, and welcome to Living in Tucson, your Tucson real estate connection. And each and every month I do the Tucson home inventory market update where we dive into the numbers, we go over inventory levels, and in my opinion, inventory levels are the leading indicator, economics 101. And over the last couple of years, inventory levels have gone down drastically, demand's gone up, which has pushed prices up double digit year over year over the last couple of years. But things are definitely starting to change. This market is starting to shift. And in my opinion, I think we're going to go back to more of a normal market. Inventory levels are going up. And again, over the last couple of years, we've seen double-digit appreciation rates. And in a normal, healthy market, markets usually, from a real estate standpoint, appreciate anywhere from 4 to 8%. So I think that's what we're going to be seeing moving forward. Buyers are now not having to compete against a ton of people. They're able to negotiate seller concessions, repairs, and again, even price. So this market is definitely starting to pull back and soften. Do I think we're going to get a meltdown? I don't believe so, but I do think that it is starting to shift. We're seeing average days on market go up, and just the whole landscape is starting to change. So what I'd like to do is keep it short and sweet. I dive into the MLS. We take a look at inventory levels. I jump over to an Excel spreadsheet. And you can get a visual of what's going on. So I'm going to share my screen. And the first thing I want to just show you is give you a update on what interest rates are doing. So we've seen a big jump in interest rates over the last probably 4 to 5 months. You know, as a result, things have gotten a lot more expensive as interest rates go up, and if home values have gone up, the cost of housing and affordability has never been higher. And when it comes to getting approved for a mortgage, it's what is called the debt to income ratio. And when rates go up and values go up, people are now becoming priced out of the market. So the good news is rates have pulled back a little bit from the highs, and they're still really low relative, but based on what home values are doing, things have gotten rather expensive. So at a 30-year fixed, you're looking at 5.22%. And on a 15, you're looking at 4.59%. So relative rates are still good. But again, just because of home values going up, things have gotten rather expensive. So now what I'm going to do is I am going to jump over to our MLS. I'm logged into the Tucson MLS, and I've got Tucson pulled up, and we're going to look at what inventory levels are doing, and then I'm going to jump over to an Excel spreadsheet, and we're going to plug everything. I've plugged everything in already, so if it's changed a little bit, I'll fix the numbers. So for single family homes listed in the Tucson MLS right now, right here, there's 1,312 active listings in the MLS. For townhomes, there are 96, and again, that number is right there. For manufactured homes, there are 85, and for condos, there are currently 115 active listings in the MLS. Now I'm going to pull them up an Excel spreadsheet, and this will give you a good visual. So right about now last year, I started to feel this market starting to shift, and I started doing these lives and started keeping an Excel spreadsheet so I could get an understanding and a visual of what's going on. So again, I've been at this for almost a little over a year now. And again, things are definitely changed from a year ago in terms of home inventory, where we were a year ago to where we are right now. So single family homes listed in the MLS, I did it right before we jumped on, 1,312. That's still the same. Manufactureds, we've got 85. Condos 115, and townhomes 96. So if you look here, since I started doing this, inventory levels have gone up 46.48%. And month over month, we're up 1.39%. So inventory levels are going up, but they're still low in terms of what they would need to be, in my opinion, for a normal, healthy, neutral market. I think a normal, healthy, neutral market, we need inventory levels to be anywhere from in the high 2000s to low 3000s for more of a equilibrium supply and demand type of market. So it's still a seller's market, but again, the landscape of to shift. And another thing too, if you're on this live, I forgot to mention at the beginning, if you have any questions or comments, you can go ahead and comment at the end. If there's anybody on the live that has any questions or comments, we'll do a little Q&A. So I'd love to get some questions or comments thrown in if you're on this live and you've got any questions. So now I'm going to jump over to the chart, and this gives you a pretty good visual of what's gone on. And typically in Tucson, from an inventory standpoint, inventories typically do rise from June, July, August, September. During the summer months when it's warmer out, the winter visitors go away. And then come into September, October, there's a lot more demand in Tucson just because we've got winter visitors, our weather and temperatures are awesome, and you've got a lot more people coming to Tucson. So the question's going to be, come in the next 30 to 45 days, when we've got a lot more demand coming to Tucson, what will happen to inventory levels? And this is this little trough right here. Again, things rise May, June, July, August, September, and then inventory levels do typically tighten up during the fall, winter, and spring. Now what I'd like to do is to give you a bigger overall picture. I'm going to jump over to Zillow, and in the MLS, I just pulled up Tucson. So it's a kind of a tight little area, but Zillow is looking at Tucson and the surrounding areas, which also gives you, a bigger picture of what's going on. So I've got Tucson plugged in here. And if you look right here, this is the active listings in the MLS. That's Tucson and the surrounding areas. We've got 1,904. And then the other are for sale by owners, FSBOs. And we'll take a look at the chart, but I think for sale by owners have gone down a little bit because when the market gets a little bit more challenging and tougher, people typically lean towards listing it with an agent to get it out there, especially when days on market go up and inventory level goes up and there's a lot more homes to compete. We've had really low inventory levels, so people have been leaning towards trying to get things sold on their own and not paying a commission. But again, that landscape is slowly starting to change. So I'm going to jump over to an Excel spreadsheet. We're going to look at the Zillow numbers. So we've got 1,904, and then the other, I didn't write that down. Hold on real quick. So other 255, it's still the same. So right now in Tucson and the surrounding areas, we've got a total of 2,159 active listings. And that is up 151 active listings from when I did this last month. So again, things are slowly starting to change. And then the other thing to look at too is the median home sales price. And over the last couple of years, we've seen double-digit appreciation rates. And in a normal, healthy market, like I said, 4 to 8%, on a good year, maybe 10%. So in 2022, the market has appreciated 9.09%, but the majority of that appreciation happened within the first 3 to 4 months. Since then, we've been going sideways. So last month, the median home sales price was $385, and the numbers just came out for July, and it was $385. So again, home values are now going sideways, where we were seeing some pretty big jumps at the beginning of the year. The average or the median home sales price was $350. So we've gone from $350 to $385. But again, over the last 3 months, things have gone sideways. And this is a chart. When I first started doing this a year ago, home values have appreciated by, this is single family homes, have appreciated by close to 100,000. But again, we're starting to go sideways from here. So that's a quick look at the chart and what's going on with inventory levels. Let me see if there's any comments or questions. Let's see here. Nope. So the other thing that I want to go over real quickly, if you're one to, I'm going to share my screen again. If you're one to want to geek out on the numbers and dive deeper into what's really going on, you can head on over to Tucson Homes and Lots. And on the homepage, if you scroll down to the homepage, right here is the Tucson Monthly Market Report. And if you click on that, it's going to take you over to the detailed report that I do each and every month. Again, you can dive into the numbers, but the real power in this report is I go over some of my favorite ones, but there's a lot more to it. If you scroll down to the very bottom and click on the full market report right here, that pulls up the market report that TAR, the Tucson Association of Realtors, puts out each and every month. And there's a lot of really, really good information in there. So I'd encourage you, if you're one to really want to geek out on the numbers, head on over to my website and click on that full report. And something else to keep in mind, if you use us to buy or sell a home, we've got a 16-foot box moving truck that you're more than welcome to use. Even after the fact, down the road, I've got clients that I've worked with since we got the truck about 4 years ago, and clients that first got it, the first year that I had it, still call me up every once in a while, say, hey, I need to move something. Can I borrow the truck? And if it's available, absolutely. So just something to keep in mind. So let me just look at some notes here, make sure I covered everything. So again, like to keep it short and sweet and just get right down to the numbers. But again, I do feel this market is slowly starting to shift. And what this means for sellers, if you're a seller out there, take a look at, rather than going about 6 months back, you want to take a look at a tighter window, the last 3 months, because the last 3 months versus the last 6 months is really different when you look at comps in the MLS. So you want to have realistic expectations going into listing your home, and make sure the key is pricing it right. If you price it too high and it sits on the market, it can actually net you more money at the end of the day. So it's really important to price your home correctly, which then drives more demand, which then drives up price. So the big mistake that we're seeing sellers make right now is their expectations in terms of what the market was compared to what it is right now. And they're just pricing their homes too high. They're not getting any traffic, any showings, and their homes are starting to sit, and they're having to do price reductions. So from a perception standpoint, when you have to start doing that, a buyer's then going, okay, this person's been sitting on the market. They're starting to do price reductions. They're getting a little bit desperate. And then you start to get these lower offers. So again, as a seller, it's still a great time to sell. Inventory levels, even though they're going up, are still relatively low, but just make sure you price your home correctly. And if you're a buyer out there, there's good news on the horizon, in my opinion. You're now having to compete against less people. You can negotiate price, seller concessions, and even the repairs, the Benzer. So on the Benzer, which is when you do your inspections. So I would just say, be patient, hang tight. I do think that you're going to have more opportunities and more properties to look at. So that wraps up this month's Tucson Housing Market Report. And just want to, let me, I will be back on doing the Tucson Housing Market Monthly Report. And if you have any questions or comments, you can go ahead and comment below. And do me a huge, huge favor. If you're finding value in these monthlies, give me an internet high five by liking this. I'd really appreciate it. And if you have any things that you would like to see or ways that I can improve, I am totally open. So comment below. And in the meantime, make it a great day.